Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 223 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today, we are going to be talking about cryptocurrency, and specifically Bitcoin, and the context around which I'm going to be talking about it is the context of criminality, right? And criminals being a part of cryptocurrency, being a part of Bitcoin, and if that's any reason that individuals should not speculate in Bitcoin, that individuals should not put any money in Bitcoin. Is this a big issue? Because we've had a big headline this week that I'm going to jump into that I think is relevant to all of those out there who hold Bitcoin or think about buying Bitcoin or whatever it may be. And I think it's really, really important to cover this area because this is one of the biggest concerns that people have around cryptocurrency. And I kind of want to clear the air and make sure that everybody understands exactly what cryptocurrency is in this context and exactly how it can work when it comes to criminals being involved with the currency. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan that is specific to you and your family's needs and keep you accountable to that plan over the long term, then I can do that. Just message me on any of the major social media sites, Instagram, Facebook, Twitter, and just tell me that you are interested in financial coaching. And we can begin having financial coaching sessions with one another to where I can help you to build your financial life and push towards your financial goals and ultimately financial freedom. Now, what headline has come out this week that made me want to talk about crypto? You know, I've really only talked about crypto at length one time, but there was a headline that came out that said the FBI likely exploited sloppy password storage to seize Colonial Pipeline Bitcoin ransom. Okay, so there's a lot to unpack there. But if you'll remember, just a few short weeks ago, right back in May, the Colonial Pipeline got hacked by some Russian hackers, right? And this hacking shut down the pipeline, and it ended up leading to a bunch of people flocking to the gas station, and there being a gas shortage along especially the East Coast, right? This is the largest oil pipeline in the United States, right? So this is very, very important to our infrastructure and our ability to move around. Okay, so if it's hacked and it's shut down, then the company that owns it has to do something about it, and they did, right? They paid these hackers because it was a ransomware attack, right? They paid these hackers nearly $5 million in order to get the pipeline back up and running. Well, that payment was made with cryptocurrency, with a fair amount being in the way of Bitcoin, right? Now, this kind of brings about the question, how do we go about knowing who got this Bitcoin, right? How do we go about getting this Bitcoin back, which the FBI says that they actually have done so. They've actually gotten a large portion of the Bitcoin back. Well, how did they actually go about doing this? Well, that really dips into what we already know about cryptocurrency and about Bitcoin specifically, is that it is on the blockchain, right? It's got this blockchain technology that is inherent to it. And the blockchain keeps a ledger of every single transaction that occurs within the blockchain, right? So if somebody sends someone else some cryptocurrency, some Bitcoin, right? Then the blockchain, right? Everybody within the blockchain will know that that was sent. They will know to whom it was sent to and from whom it was sent, right? The problem is, right? You know what wallet it's sent to, one wallet to another, right? But you do not know exactly who is behind that other wallet, and you don't know that person's password key to get into their wallet and actually take the Bitcoin back. Now, this headline did make a lot of people afraid and wary when it comes to Bitcoin because the big draw of Bitcoin, as we all know, is its decentralized nature, meaning that it is not run by any government agency, right? It is decentralized. And when you hear that a government agency can actually go in and get Bitcoin back that they have sent someone by likely hacking to get these keys, to get these private keys to these Bitcoin wallets, right? Well, that makes a lot of people who are really high on Bitcoin think, is this as decentralized as we may think, right? Is this as secure as we may think it is, right? Now, a lot of criminals have tried to use cryptocurrency for their criminal activities. But the real question is this as big a deal as people make it out to be, right? Is it as big a deal as this headline of the FBI seizing this Bitcoin made people think that it may be? Because if criminals are going to continue to push volume in the Bitcoin market, and then the Justice Department is going to crack down on criminals and it really cuts volume, well, it's also going to subsequently cut the price because they're not going to think that it is safe to transact in Bitcoin or transact in other cryptocurrencies on these particular blockchains. But the question really comes is it significant enough to make a difference, right? Is it significant enough to actually change the way that we should think about this speculative product, this speculative currency of Bitcoin? And you know my feelings on Bitcoin. And if you haven't heard my feelings on it, you can go back and watch the full video that I put out on Bitcoin and specifically what I thought and how I thought it could play a part in your investment portfolio. But again, purely speculative, not a true investment, okay? But let's just do a quick fact check, right? And we're going to fact check the statement that crypto is increasingly being used for criminal activity and is a haven for illicit finance, right? Because this is the issue that a lot of people want to talk about, because if a lot of people are doing criminal activity on these blockchains via Bitcoin and other cryptocurrencies, then they are likely to get scared away by any government intervention, right? But are they significant enough? So because cryptocurrency is still new, and we're often asked about the biggest myths surrounding it, right? It's common for a new market or product to confuse people until they get familiar with it. Okay, think about Airbnb. The idea of staying in a stranger's home seemed crazy until it didn't, right? It seemed crazy that you could go and stay in a stranger's home and just pay them something, right? Back in the 70s and 80s, you would have never dreamt of staying in a stranger's home, right? That just seems absurd. You remember the days of your parents saying, don't trust people who you meet online. Don't go and meet people online. Now people are on Tinder and all of these other dating sites, right? And they are almost exclusively meeting people online. The world changes, right? And so cryptocurrency has jumped into this finance space, and it is still scary to a lot of people. Now, one of the most widespread but false notions about crypto, and we're going to talk about why it is a false notion, is that it is mostly used by bad actors for illicit financing, right? And many large names, right, many very famous names have said negative things about cryptocurrency when it comes to criminality. First off, you have Treasury Secretary Janet Yellen, who said cryptocurrencies have been used to launder the profits of online drug traffickers, right? They've been a tool to finance terrorism. And this may or may not be true, right? But is it true on a significant scale? Then it's a tool of kidnappers and extortionists, that it's contrary to civilization. And that's what Vice President of Berkshire Hathaway, Charlie Munger, says. And I respect Charlie Munger a lot. I've learned a lot from his investment ideology and from the way that him and Warren Buffett have run Berkshire Hathaway. But is he wrong here, right? Is this just false? New York Times columnist Paul Krugman said that very few people are using Bitcoin to pay their bills, but some are using it to buy drugs or subvert elections. And President of the European Central Bank, Christine Lagarde, says it's a highly speculative asset, which I would tend to agree with. It is a highly speculative asset, right? Which has conducted some funny business and some interesting and totally reprehensible money laundering activity, which again, I'm not saying is untrue, right? I don't have the evidence to say that that's untrue, but how much of a percentage of cryptocurrency is that really making up, right? Is it really such a large part of the market that it should drive people out, right? Now that you see that the government can actually step in and take crypto back based on the fact that something is criminally illegal, right? Now, all these statements are false in one way or another. So let's look at the big myths here. Myth number one is that the majority of cryptocurrency transactions are for illegal activities. And this is just simply not true. Okay, research shows that illicit activity accounts for less than 1% of transactions. And of that small portion, scams make up the overwhelming majority of cryptocurrency related crime, not money laundering, terrorism, trafficking, or other unlawful activities. So basically, what you're seeing when it comes to crime around cryptocurrency is just people getting scammed. And people get scammed out of their money all the time. I'm not saying it is a good thing. I'm not saying it should occur, right? But this is not just specific to Bitcoin or specific to cryptocurrency. This is specific to people trying to get into other people's wallets, trying to get into other people's accounts, whether it be bank accounts or their crypto accounts, and doing so successfully by scamming those individuals. Now, from 2017 to 2020, criminal economic activity was overwhelmingly conducted through traditional financial institutions and not cryptocurrency, right? You would think if cryptocurrency was such a haven for this criminality, for such a haven for getting away with criminal activity, then a lot of criminals would jump to actually use it, right? But if in the recent past, the overwhelming majority of transactions that have been, illegal activity have been done through traditional financial institutions, that tells us either one or two things, right? Either the criminals have looked at Bitcoin and looked at the blockchain and looked at cryptocurrency and said, this is not the place that we need to conduct our business. It's too risky. It's riskier than using a traditional financial institution, or they're afraid of change. And it may be a little bit of both, right? But I would say that the previous is more likely than the latter. And we'll talk about why as we continue through today's episode. Now, myth number 2 is that more illegal activity takes place using cryptocurrency than with cash. Now, good old-fashioned cash continues to be the funding of choice for criminals, right? There is no surprise as to why when you watch TV and, you watch a show where there's criminal activity and you see somebody with the briefcase, right? And they put the briefcase on the table and they open the briefcase and it's got, stacks of cash in it, right? That tends to be the sign of some criminal activity actually occurring. Right? And this continues to be the case. It continues to be the funding choice of criminals. The UN estimates that nearly $1.6 trillion in cash is laundered each year. That is an astounding amount of money. Okay. Meanwhile, criminal activity in cryptocurrency actually fell quite dramatically from 2.1% in 2019 to less than 0.5% in 2020. Now, this could be for multiple reasons, but with more adopters of cryptocurrency, right, and more institutions getting into cryptocurrency and governments beginning to understand cryptocurrency better, it might actually drive out criminals, right? But if it drove out criminals even into 2020, right, we didn't hit our peak as far as the Bitcoin price until April of this year, right? So it obviously didn't have a huge negative impact on the price if the criminal activity was being squandered in any way, shape, or form. Okay, so despite the perceived appeal of cryptocurrency for money laundering, right, an estimated 99% of cryptocurrency transactions are performed through centralized exchanges subject to the same AML, CFT regulations as traditional banks, right? So these transactions, even though they are on the blockchain, right, and even though they are decentralized transactions, right, they are still performed through centralized exchanges because these transactions have to be done in some way, shape, or form that is, beneficial to the individual, beneficial to the people buying and selling. And so naturally, right, you see that most of these transactions are not criminal, and criminals are still preferring cash over using any other type of currency or any other type of financial institution other than what is traditional to them. Then, myth number 3. Cryptocurrency makes it harder for law enforcement to investigate malfeasance. Now, this is the big thing that they say draws the criminals to cryptocurrency, and it's that cryptocurrency makes it harder for law enforcement to track you, right? Because it's all on the ledger and it's all decentralized, and nobody's looking at what's going on. Well, that may be more true in some cryptos than others, but in cryptos like Bitcoin, which is the most popular, right? It is very transparent, and it is a friend to the FBI, quite obviously, because the FBI was able to take back most of the Bitcoin from that particular transaction via the Colonial Pipeline hack, right? And so you see that this is a friend to the FBI. It's a friend to law enforcement that you use cryptocurrency, because if you use cash, how is somebody going to track the cash that you're using, right? It's going to be very, very difficult and going to take a lot of physical work in order to track cash, right? But if you are trying to track crypto, it's not difficult to understand where one Bitcoin goes, right? We can track one Bitcoin or where one Ethereum goes. We know where one Ethereum goes, right? So you just have to track it to one particular wallet or multiple particular wallets. You have to get the keys for those particular wallets, right? Which is the tricky part, and that's the part that a lot of people are a little wary about, the fact that the FBI actually figured out the keys for these wallets, right? And then you can get the crypto out of those wallets. Now, crypto is easier to track because searchable public databases, blockchains, already exist for the majority of transactions. Even the Department of Justice says so. They say that it is easier to track crypto than it is to track cash. This gives law enforcement access to sustainably more information than a case involving cash, including the date, the time, the amount of the transaction, as well as the type of crypto used, the wallet address involved, and the unique transaction identifier or hash value. So think about all of that information that you're getting. You know when the transaction occurred, you know how the transaction occurred, you know in what currency the transaction occurred, and you're telling me that's beneficial for the criminal? No, that is beneficial for the government agency. That's beneficial for those who are trying to actually catch the criminals, right? This is not going to be beneficial for criminals overall. Now, once that data is recorded in the blockchain, it cannot be altered retroactively. There's little risk of data loss and confidentiality is maintained, right? So this is also a big thing that can benefit those who are tracking criminals and not the criminals themselves. The criminals can't get in and say, oh, well, let's just change some of the information in the transaction, right? Let's change the wallet address. Let's change what particular cryptocurrency it was actually done in. Let's change the date and the time. You can't actually do that. You can't go in and change it retroactively, right? And the fact that you can't do that gives the government agencies an upper hand, right? So why would you choose to use cryptocurrency for criminal activity if this is going to be the case? And then immediately accessible with crypto, this kind of information can take law enforcement months or even years to obtain regarding cash transactions. So instead of taking months or years to catch somebody or know where the money went or follow the trail, right? You can actually follow the trail instantaneously, right? You can know immediately where that money went and exactly how that money went wherever it actually went. Right? This data is already paying dividends to law enforcement who has teamed up with private analytics firms to analyze blockchain transactions to identify individuals involved in illicit finance and pursue investigations into the dark web, child exploitation, and even terrorist financing. These examples illustrate that crypto is not a haven for criminal activity for illicit financial dealings, but a medium for a wide range of secure, trackable transactions, right? And that's the key. That's what I want to get through to you guys, right? And I'm not sitting here being a huge crypto bull, right? You know that I do think it's a speculative asset. I do have money that is in it, but not any that I am not afraid to lose, right? Again, it's speculation. We don't want a large percentage of our portfolio to be speculation, but Bitcoin is a speculative asset. So is Ethereum. So are other crypto assets, right? But even for these crypto assets, you don't have to worry about criminality and you don't have to worry about the price being swung by the fact that criminality might exist, because there is this transparency. There is these particular safeguards in place that actually make cryptocurrency less desirable to the criminal, right? So we need to understand this. We need to understand that even though this is something that we don't understand, right? And even though it seems like something that is scary and something that could be used on the dark web or whatever, right? It is very easy to crack down on. So anybody who is trying to use it in that particular way is going to be easily caught. Just think, right? Just think if the financial institutions that traditionally move money were to have moved money to this hacker from the Colonial Pipeline, right? To kind of bring it all back full circle, right? If they gave these individuals money, right, it would be much easier for them, since the process is manipulated in an easier way when it comes to these traditional financial institutions, right? It would be easier to do it via these institutions. It would be easier to just take the money via these institutions and do crime in that way, right? And it would be much harder for you to get caught because you know the system a little better, right? And there's not complete transparency of exactly what goes on. Yes, banks have transaction records and all these types of things, right? But it is not like the blockchain. It is not what's going on with cryptocurrency. It is not as detailed, right? And so even though that may be the case, right? Even though it may be the case that they could use these financial institutions, obviously they chose not to. And the question really becomes why, right? Why did they not choose to use financial institutions? Well, obviously they thought that there was some privacy and some advantage to having it within whatever crypto wallet they had it in, right? And maybe they thought that the private key that they had on that crypto wallet could not be attained. Well, obviously, it was attained, right? The FBI actually did this. And based on this headline and based on this article, apparently all they did was exploit some sloppy password storage. So even though these were good criminals in being able to shut this pipeline down, they obviously were not good criminals in understanding how to store their passwords and how to keep things away from the federal government, which likely should have been top of mind, because if you shut down the largest pipeline in the U.S., right, many are going to look at that as an act of terrorism, and they're going to want the FBI involved immediately. And the FBI will go to many, many lengths to shut down whatever type of malfeasance is occurring within financial markets or just within the world in general, right? The FBI is going to be very tough to beat. And obviously they were very tough to beat. So the FBI's breach of a Bitcoin wallet held by the cyber criminals who attacked Colonial Pipeline is all about sloppy storage and not a reflection of the security vulnerability in cryptocurrency, which crypto experts told CNBC, which of course, crypto experts would want that to be the case. They would want it to be the case that it doesn't reflect a security vulnerability, because if it did, then that would drive a lot of people out of the decentralized currency. That would drive a lot of people out of Bitcoin. And if you look at Bitcoin's price over the last 24 hours, it did drive quite a few people out of Bitcoin, at least in the short term. Now, obviously, Bitcoin has been trading in a range that has been much lower than its all-time high, right? We're down nearly 50% from all-time highs that happened just short of 2 months ago, right? So Bitcoin has already taken quite a hit. Maybe it would have taken a larger hit on news like this if it was closer to its all-time highs, but it did not. So it's really important for us to take all of this evidence and say, well, then should we still put money into cryptocurrency? Right. And I've told you this before. I've told you this, that I think that traditional investing in mutual funds, stocks, bonds, even, right, if you have a lower risk tolerance or are closer to retirement or have it for a specific purpose, right, those types of things are going to benefit you over the long term. They are tried. They are true, right? They are investment types that can benefit you. OK, Bitcoin is not an investment. Ethereum is not an investment. Right? It is speculation. Now, you may say you're investing in the blockchain. Fine. Right? However you want to say it that makes you sleep at night. But it is speculation because, again, we have to remind ourselves that an investment is where, upon thorough analysis, it will provide us a promise of safety and an adequate return, right? Well, Bitcoin may provide you a very adequate return, right? Even in being down almost 50% from its high, it's still up like 13% year to date. Right? This is still an asset that has provided returns. But when it comes to safety of principal, right, that's where the question lies. Is your principal safe? And that's why I talk about criminality and cryptocurrency here today, because I want you to know that I think, right, and just based on the facts, based on the evidence, and based on what I have learned about the blockchain and done the research for myself, that it seems that it is, right? It is safe to hold your Bitcoin on the blockchain. It is safe to purchase this decentralized currency, right? But is it going to remain safe, right? Is it going to maintain value? And that is a big question. And when it comes to currencies, right, typically it is hard to determine whether you'll maintain value or not, right? But since there is no promise of safety, right, there is no promise of safety, then I don't look at this as an investment. Right. And not to mention, you can't do any thorough analysis of Bitcoin or Ethereum. There's nothing fundamentally to analyze. And since there's nothing to analyze, then I cannot look at this as an investment vehicle. But in being speculation, that can be 5 to 10% of your portfolio max, right? Which I've said before, right? I don't think speculation should be a larger percentage of your portfolio than 5 to 10%. And if it is, then you should bring that down and put money into more traditional investments that are going to grow steadily over the long term in a more predictable manner, right? But if you are speculating, then it's okay. It is okay to put your money into Bitcoin. It is okay to put your money into Ethereum and things of the like, right? I'm not a guy sitting here trying to pump it up, right? That's not in necessarily the best interest of everybody who is watching the show, because that is what I want to help you guys with. I want to be in your best interest, but your best interest, right, is to invest in a traditional way. And then if you want to speculate, in the same way that I say, if you want to speculate in individual stocks or these meme stocks like AMC or GameStop or BlackBerry, or now Wendy's is becoming a part of this meme stock group, right? If you want to get involved in those, still it should be 5 to 10% of your portfolio max. All of your speculation added together should be 5 to 10% of your portfolio max, right? And that's okay. It's okay to do a little speculating, because sometimes speculating pays off in a very big way. And that's why I put money into Bitcoin. That's why I put money into Ethereum, because I think it has the potential to pay off in a very big way. But if I lost everything that I had in Bitcoin and Ethereum, right, I wouldn't be sitting crying on the side of the street, right? Because I have traditional investments that are in place for the reason of growing over the long term. And I know that those are going to be adequate in order to get me to where I want to be over the long term. And hopefully, right, you can make those same kind of decisions for yourself. But I want you to know, right, the reason that I make this episode, I want you to know that if you do put money into Bitcoin, you do put money into Ethereum, it does not seem like it is just riddled with crime. And it does not seem like, if you can't do crime on these particular cryptocurrencies, then they're not going to be worth anything. That does not seem to be the case. Of course, there's crime going on with these currencies. There's crime going on with the dollar every single day. There's crime going on with every single currency in every single country in the world every single day. So that's not surprising that some crime does occur. But what we should be happy about, what we should be glad to see, is that when such a large crime, such as hacking the largest pipeline in the United States, when something like that does occur, right, we have a Justice Department that can actually take action, and they can actually do something to stop it and get money back for the company that paid the ransom on that particular hacking job, right? So we have to understand that even though this is a speculative asset, even though a lot of people are still afraid, right, we have some positives to look towards when it comes to the criminal activity that may or may not be occurring via the blockchain and via things like Bitcoin and Ethereum. And so you may be asking, why do I need to know this? Why is this important to me as an individual investor? How is this important to me as an individual? Does this not have to do with larger investors or people who have more going on in this crypto market than I do? No, right? It does have something to do with you. And the reason that it has something to do with you is because, right, more and more institutions are moving towards Bitcoin. They're moving towards Ethereum. They're moving towards this blockchain technology, right? They're adopting, right? And as more institutions adopt, it is going to be more and more of a part of our lives. And many think that Bitcoin or some other cryptocurrency will eventually be the currency that we use to buy or sell products or services at a regular rate. Yes, you can do that now, right? But all the kinks aren't quite worked out. They say that things are going to get better over time and that it will become the primary place that we do our transacting. And if that is the case, then it is important for you to understand a little bit about it. And again, I go way more in depth as to what Bitcoin is, what cryptocurrency is in my previous video, which I'll provide a link for you guys. But you need to understand this, because if it does change the way that finance works, if it does decentralize finance, if it does do something that just shocks the entire financial world, which some predicted it might, right, then you need to understand it, right? And I think that it's good to have a little bit of understanding of everything, right? It's good to have a little bit of understanding of everything that's going on within a financial market at a particular time, because it can allow you to make more informed decisions. It can allow you to understand things in a better way. Whether or not you act on this video or act on this information is irrelevant, right? I'm not asking you to go invest in Bitcoin or Ethereum or put money in Bitcoin or Ethereum or whatever, right? But what I am asking you to do is to look at headlines, pay attention to what's going on, things that are important to national security, things that are important to financial markets, right? Questions that people have about these large crypto markets, exactly what is going on. If you can understand them a little better and you can answer those questions in a legitimate way, then you will be better suited to be an investor, and you'll be better suited to make good financial decisions over the long term. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. All you have to do is just message me on any of the major social media sites, Facebook, Instagram, Twitter, and just tell me that you are interested in financial coaching sessions, and we can begin working together and pushing towards the attaining of your financial goals and ultimately financial freedom, because that's what I'm here for every day, is to help you guys to attain financial freedom over the long term and to become the strongest and most financially independent individuals that you can be. So tune back in tomorrow as I continue to provide you content on personal finance topics that I think can be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.